All right, ladies and gentlemen, welcome to the show. I'm going live today, uh, or I should say public. I guess I'm by definition live, but we'll go public today. We did go into a correction in BTC. Figured it'd be interesting to get some perspectives and see what some other people are thinking. It's been a while since we were public, so we're gonna give that one a shot. The Blad, what's up, the Blad? How you doing? Enjoying your cryptocurrency bull market? I think it's called the bull market. That's what we're in, right? I think it was. We actually just went into a correction vis-a-vis the fallen through day system, bud. So we'll see if we get if we continue bullying at all. Living life, yeah, that's right. Live life, save up, you know, improve your day to day, work hard. That's all you can do. Very nice, very nice. Time to hodl, yeah, yeah. I mean, I think we're gonna chop around for a bit. There's still so much data, macro data out there, and after we get a rally of this substance, and this we got a good rally here, like a 50% rally in BTC. That's really nothing to laugh at. Stock market had a little mini rally too. When you get stuff like that happening, the buyers have to continue buying, and the question is why will they continue buying? And I don't have a great answer to that at this moment in time. Hey, what up, Don? So why would they continue buying? I think that has to be answered in all asset classes, not just cryptocurrency. And I think at this point in time, with so much up in the air, there's still, some layoffs happening. I just think it's a lot of, oh no, I just think there's a lot of uncertainty out there, and people aren't willing to put money to work. And I understand it. People don't want to put uncertain money at risk. I'll just say this: if we don't go falling off a cliff, then the bounce back will be tremendous because there'll be, I think, a lot of money on the sidelines ready to put to work. So, all right, let's talk about some BTC and some technicals and stuff. The COVID again? What do you mean? There's no more COVID. COVID died out like the flu. Oh, you got COVID again? Is that what you're saying? IGOD is GOT? Oh, geez. Well, that sucks. Quit licking doorknobs, man. I know you like to travel and stuff, but you don't have to lick the doorknobs everywhere you go. Use your hands and then lick your hands like a normal person. Jeez, you're killing me. Well, get better, rest up, drink fluids. Yeah, remember to drink water. I think a lot of people forget to drink water when you're sick. I know I do a lot. My favorite coin at the moment, US dollar. It's kind of a I think Bless said it, kind of a hodl scenario, or just a cash scenario right now. I think cash is the best token. I don't hate what BTC is doing. That's one thing. I don't hate what it's doing, but we did move into a correction, so I'm just kind of I've been stepped to the sidelines for a minute, and nothing just felt like it wanted to move. My newsletter went from really thick to thin within a course of about 2 days, which is really fast. Usually that takes a while. If we're in a pretty good environment, we'll see setups continue, but they didn't. You like Matic? Yeah, I like it, but it's not doing it. I don't think Solana's better. I think Solana reminds me of Matic before it broke out. Right here's Solana, kind of in this choppy box area, eventually moving up. But these most of these moves up really weren't. They stalled out and they just couldn't keep going. Anyway, all right. So let's take a look at some technicals. BTC. We'll move on from there. BTC moved into a correction now. Not on. Let's look at the daily chart for a minute. Now, our follow through day system here on Binance, we are not in a correction because yesterday's volume did not exceed the prior day's volume. But if you look at the index chart, it did, and we are in a correction. So I'm going off the index chart this time. This is new, considering that most of the time we've been living off the Binance chart because it's the um, number one cryptocurrency exchange by volume. Hey, what's up, Aram? We're public today, bud. Just so you know. See some unfamiliar faces in here, or some familiar faces in here. Um, what was I talking about? I was gonna look at market. What was I talking about? I just forgot what I was talking about. Oh, yeah, I was gonna look at Bitcoin exchanges. That's what I was gonna do. Go away LastPass. So if we look at this, I mean, Binance still has a really good chunk of the market at 28%, but it is only 28%. I don't know. That's so. I don't think any of these numbers add up to 100%. 28 plus 10 plus 1 plus less than 1 in perpetuity. I don't know. I don't know how that works out. I don't know how these numbers are populated, but there's obviously, you know, more. Geez, 1.2. Coinbase is down to 1.25%. KuCoin's at 0.45%. I don't know. Something's weird here. It's kind of difficult to get a really good perspective on these charts and volume. Trying to do something like the follow through the system. So I'm kind of using the index chart that CoinMarketCap puts, or TradingView puts together, and I guess I'm just hoping it's legit and valid because it seems like it should be. But if we're going off the Binance chart, we are not in a correction. But I'm kind of making a decision and calling it a correction based on this chart and the elevated volume on this chart versus this chart, which did not have elevated. So I don't know. Pick your poison. We'll see which one wins out in the end. But that's kind of what I'm going with at this moment. Is that we are in a correction. How long will it last? You know, it's hard to tell. Corrections can last as little as 4 days and as long as this. Well, the last time we were in a correction, according to this chart, lasted 121 days. I don't think that's the longest it's ever lasted, but it's going to be up there. And I'm not sure if these criteria going back to, say, 2017, 2015 actually work. So there's one. Yeah, something like that. So 121 days. Oh, there's the Binance. There's the index chart. 121 days is quite a long time to stay in a correction. And when we came out of it, it worked really well. So here's correction, then a follow through day, 17 days. So that wasn't very long. This one could have been longer. This one, 111 days. That's about that. Chopped around for a while after that, and went into a correction pretty shortly thereafter. Right here. Only about a week. A little more than a week. 8 days. Moved into another one. Another uptrend there. This uptrend lasted. So, as you can see, it's just a lot of... Anyway, we're chopping around right now. And so, what do we do at this point in time? Not a lot. We were talking a little bit ago about the macro situation. That's what's going to stall us out, and for a good reason. And it should. So, I don't think any of this is abnormal. The question is 50 going to be right and the world's going to fall apart? Or will normalcy take back over and, hopefully 50 has stops on his shorts? So I think that's what's happening right now. Market upside has concluded itself, at least for this leg of the journey, and we're waiting to see what the market's going to give us next. We had like one good pump and a couple of secondary moves. Some altcoins did really well, but now that BTC kind of rolled over, you see the altcoins did also, and that's to be expected, and that's what happened. So it is what it is. But right now, I don't think there's a lot to do with BTC. I think it's, from a trading perspective at least, we do have a trend line here that we're holding loosely support on for the moment. Looks like in about 15 minutes, I guess an hour and 45 minutes, it'll probably conclude through that trend line, and something else will have to form. So every trend line gets broken, I'll just delete it, and we'll see where we end up. So far, holding the horizontal here, which is not this 21,944. This would be the support here. This could be considered an island bottom. Maybe we'll get another one here. I mean, it looks a little similar between these two scenarios. Kind of a higher high, almost an upward channel here. Similar here, not exactly get a triple top. So maybe it's not the same thing at all. Then an undercut, the retest of this kind of trend line here, and then living lower in a technical bear flag. Sellers are taking over. RSI is bottomed out on the 2-hour time frame. So it'll probably rebound, maybe stall here at the 23.6 and roll over again and see what happens after that. But just bouncing back into new highs seems unlikely at this stage of the game. If the buyers were to step in, they probably would have done it here about a week ago, and they did not. So we're just kind of taking our time here at this stage, I think. Yeah. All right, let's move on to top 20, and we'll move on to the altcoins too. A few things about that. We'll talk about stocks, which had a really bad close as well. All right, next up is Ethereum, which has really been following Bitcoin's direction. Hasn't been doing anything on its own, never really took a leadership position. While it did try to rally here through the 1721, it never really got past that. It ended up being the ceiling here through the first part of the week or the latter part of last week, rolling over here in another bear flag, very similar to what Bitcoin's doing. High volume bottom here could lead to some stability. We talked about Bitcoin rallying to this breakdown point, and ETH could do the same to the 1634. But Bitcoin's just following, Ethereum's just following Bitcoin at the moment. We're at the 50-day moving average. Wasn't really paying attention to that on BTC, so we're above the 50-day moving average. Maybe the best case scenario is that the 50-day comes back and tests the 200-day in a little bit. Then we can see a little bit more stability. And ETH could do something similar. The 50 could come back down, test the 200-day. That wouldn't be something out of the ordinary, I don't think. Monkeytron! Hey, he's alive. Holy crap. Hey, someone actually go wake Monkeytron up. I think he's been hacked. I just want to make sure that he's okay. I think he's tied up and bound in a chair somewhere. So, Rom, go check on Monkeytron. I don't know, Blem may be closer. I think Dawn may be closer. Dawn, fly to the UK and go make sure Monkeytron's okay. Good to see you, bud. Good to see you here. All right, next up, we're going to look at Hex, because I know everyone loves Hex. So Hex almost got to that 7.5 level. Pretty close. Topped out at just about 7. Hey, what's up, Andre? Feeling okay. Just waiting here at this stage of the game. Topped out almost at 7. Never quite got to 7.5 before the market really kind of stalled out. Hex never had any major volume going up anyways. And looks like we're coming already back down to this last little horizontal from the cup and handle. And we'll see if we're able to rally through. I'm not so sure it's going to work out in Hex's favor. But not a bad spot for Hex up near this, I guess, 5.7 cents now. Giving up pretty much all the 6 cent level. But not bad. We'll see if it's able to hold on and break through. But with the market in correction, I don't think there's really too much going on here that we need to really be concerning ourselves with. All right, next up is BNB. And BNB choppy sideways. Pretty much the rest of the coins in the top 20, outside of Bitcoin, ETH, and Hex, have pretty much been choppy garbage. Especially for this last week. And I was kind of running through these, and I'll probably run through these again. We'll probably have a short show today. There's really not too much to talk about in terms of buying opportunities. Maybe not even shorting opportunities. I'm not even noticing a lot of good short setups. At least not quality ones. So I think that's kind of where we're sitting at in the moment. But so BNB here, sideways chop. There's really not a lot going on. Daily isn't giving you anything. 2 hour isn't giving you too much, just another lower low. If you wanted to short, maybe up here would have been an opportunity, but not really too much going on there. We've got XRP chop again. Like I said, all these top 20, they just look like a lot of random action. Dropped down yesterday on XRP. You see the volume here on the 2 hour time frame leading us to a bear flag, which probably could lead lower, but you've got some support here at 36. We could also, rally through the. It's just a lot of random action right now. Dogecoin, very random as well. Maybe consider this a very large H pattern, although there's a gap here which negates really the H pattern in my mind. But if it does fall through the floor here at the 7887, that would be a break of support. Also the break of the 200-day moving average. Cardano, bear flagging out here. We did drop down late yesterday, I guess mid yesterday. So finally breaking nothing really. If you look at the daily, we didn't break anything. We got a low here at the 34.5 cent level and some support there. More chop, not much to do. Solana, generally one of the better looking tokens, had a really good rally. Just never put together another one. The market was generally sideways. Our alert at 26.59 was tested for a little bit and stalled out. That's pretty normal. We broke a trend line and said we were going to come back down and probably test the lows. Maybe we'll get to the lows. Maybe we'll stop earlier. Say 21 to 22 range is very common. So very normal stuff going on here in Solana, but really nothing buyable yet. We don't have any major bottoming signatures. One good thing here, though, is the VA tool you see is getting really flat as we're dropping, and also these spikes in selling pressure are diminishing. So one of them will be a bottom. The question is where. We're testing the 22, which I just mentioned, 21 to 22. We could bottom in this range and never fully quite hit the lows here at 2037. So maybe we'll bounce back up at some point. Solana was our early leader, and the fact it really did nothing over the past month maybe leads to the fact that it's leading because we never did shit because shit never happened with our leaders. So I think that has to be taken into account as well. And so that's what's going on here. If you want to, we talked about crossing the trend line. That would have been a decent short. We actually talked about that a little bit. But again, crossing this trend line could mean a long, but if depends how low we get. If we get all the way to the lows, we could go all the way back up. I could also stall in the middle here. There's a little low here, almost dead in the middle at 23.23. A couple of things to do there, but nothing today to do. All right, next up is Matic. Matic is playing with its trend line that's held it up this entire time. It's not a healthy place to be, and we should chop at a minimum. Further pullbacks, if it gets worse, I guess. But this is basically a done trade. If there's a trade here at 104, got up to 135 and even up to 150. So nice move right there. But looks like we finally concluded. No extraordinarily large selling candles up at the top. It just kind of expired out. And but if you got in at some point, you're not selling now. You need to consider when. All right, DOT. DOT chopping around 65.37 was our alert level. We already talked that's kind of a moot alert level. And we're right back down here already chopping with it again in a full-blown bear flag situation. So it could drop lower. Support should be down here at 5.9. We're at 6.5. So that's not, if you're thinking of shorting something, that's not a bad 10% on the table. Stop loss maybe could be up here. That's only 1.5%, 1.75%. That's not too bad. Could do something like that. But again, expect everything to be stopped out. Long or short, probably. It'll chop everybody around, I have a feeling. All right, Tron, which kind of was starting to think about performing, never actually did. And now we're right back down chopping above the 65.77 alert level, but not doing anything constructive. Shiba Swap. The definition of chop, in my opinion, just all over the place over the past couple of weeks. Just up, down, up, all the way down, up further, down with a big spike, double top, double bottom, lower high. Now you have a lower low. It's just everywhere. It's just doing everything. It's horrible. If you could bet on random, that'd be a good bet. AVAX. AVAX definitely had a bigger move lower yesterday. It undercut our 1988, found support here, undercut it, and then just really couldn't hold anything together. While the market fell apart, it did as well. And now we undercut a lot of levels, so really deep in the chop here on this one. Uniswap. Uniswap here, choppy is, look at this chop. I mean, this is some pretty darn good chop. You want to give a lesson on chop, these are the charts to do it on, because it's just, there's not a lot of great trading right now. It's just a lot of chop. If you can trade chop, you're making a killing right now. Trade trend lines, trade RSI spikes, trade reversals, trade MACD crosses, whatever you're trading on the shorter time frames, like 1 hour, 2 hour, 30-minute charts, something like that. You probably could do pretty good if you want to be doing like that. How can you trade in this market? I just kind of gave you the game plan, Aram. I mean, in reality, so the daily charts aren't doing you much good. Like, how can you do anything with this information? Let me timestamp this. So really what you can do is get rid of the daily and put on these lower time frame charts. This makes a little bit more sense. You can act on some of these signals. You can even go lower time frame. Let's do the 30-minute, which I can't remember the last time I pulled up a 30-minute chart, but I'm just thinking of some, time frames that give you more information. And you could trade on a smaller term chart. That's really the only thing you can do. I mean, here you've got a failed cup and handle on the 30-minute chart. A failed cup and handle. Generally, you could probably short on the low break here. Elevated volume. This puts in a nice run for you, 6%. And then, just rinse and repeat, I guess. Here you have a failure at this whatever this was. This was this was like a triple quadruple top almost in the bigger time frame. So failed there, and this could be a selling point as well. But again, you have to dig down to the lower time frames. Yeah, as an investor, bigger, yes, absolutely. If you don't want to trade short, and keep in mind too, this is something interesting I don't think a lot of people think about. The longer your time horizon and the bigger chart you look at, the less you have to look at the chart. The reason being is because the information's basically the same, right? If you're trying to look at sea level rise, let's use that as an example. Don't know why I chose that. But if you're trying to look at sea level rise, you want to measure probably year over year. You don't want to sit there with a measuring stick on the beach and watch the waves go up and down, because you're not going to get a good reading off of that. It would take you a very long time and a ton of patience, and you'd probably die. Your brain would probably kill itself because you're not getting any valid information. So you really want to stick to the larger time frames. And when you're not getting anything useful out of those, it's okay to, like I said, just like what I've been doing, really nothing much. When the chart becomes a discombobulated mess of garbage, the best thing to do is pull out and do nothing. Basically. I know there's a sexual joke in there somewhere. I can't think of it though. But yeah, if you want to be here, Rom, you want to look for, if you want to be on the daily time frame, you look for the best looking charts, the best technically sound charts. And you can try to time entries, with these lower time frames. These are great to time entries with because, let's take a look at BTC. We talked about, where was I thought we had an alert. Oh, it's down here. Is it on this chart? Where the heck is it? Oh, there it is, 21.9. So if you're trying to time this reversal, remember we talked about this. If you're trying to time this reversal, with the 21.944, let's use that as an example. You can kind of do it on the daily time frame. It doesn't look as significant here, but when you're getting to the point where you're breaking out through there, it's good to see this type of information, right? Because you've got this low volume swath, and then what happens? You get this big spiky volume candle, which doesn't really become clear because it happened right in the middle of the day. On the daily time frame, it's going to be harder to see that. Right here, if you look here, the volume doesn't show you that much. But if you dig down, all right, later, Andre. See you, bud. But when you dig down, you can see that it is a bit of an event, and it's crossing a level you had previously considered valuable with elevated volume, and so you can enter there. So you can use your dailies, and which is why I use the daily in the 2-hour time frame, because the 2 hour is big enough to give me, to cut away a lot of the chop, but it's small enough to give me enough context where I can see these kind of volume pops. You know what I mean? If you go to the 30-minute time frame, it's probably not going to be that different. Another reason I use the 2 hours because I can put more information on one chart. That's the other reason, is because on a 30-minute time frame, say you'll get 60 days of information. On a 2 hour time frame, you'll get 240 days of information. So that's another reason I use the 2 hour. But here you can see on the 30-minute, there you got the one big volume spike, and then the retest, and then you see a large kind of a cup with the longest handle in the world, and then a further breakout. But so timing entries, you go to the lower time frames. But when you're doing your main analysis, I generally spend most of my time looking at the daily. But I definitely do keep an eye on the right side of the 2 hour chart so I can see if volume's stepping in. That's really what that's for. Is that okay? Is volume really small right now? How's it been trending the past week? And then is it getting bigger? So trades are profitable. Very good. Yeah. You know what I was going to ask? If you made money during this last bull cycle, not you, Aram, but you as well. But generally, if you didn't have profit in this last cycle, you have to identify what you did wrong and try to not repeat those mistakes. So that's always a good thing to do. That's fine. Well, I mean, something you can do, Aram, is you can make a spreadsheet, put all your trades on it, try to figure out your percentage you got stopped out, and then go back with the charts and with hindsight, and especially with it being recent, you'll have a good memory of all these trades. Just do a great post analysis and say, oh, okay, I let this one go too long. You can one thing that really worked for me is figuring out kind of your average profit. What is your What is your general average profit, and what is your general average maximum profit? What I mean by that is if you have, I'm just going to, use my options trading as an example because I do that with options more than I do with crypto. But, I noticed that most of my options trades, I would get to about 150% of profitability. Profitable. It'd be 150% profitable. And I would end up closing most of my trades out about 75% profitable. So I'm like, okay, what if I just took profits at 100%? I would be likely to hit that 100% number, and I would take 50% more profit off the table, or 33% more profit off the table. And it worked out really well. So those were my numbers and how I was responding to those things in those situations. Yeah, well, it's hard to say when you say I'm looking for more, or you say I'm looking for more than 50% gain. So you can only take what the market gives you. And each market situation is going to be different. Like this bull cycle was much different than that 2019 bull cycle we were thinking it was going to be like, right? Like we didn't get a correction over here by a long shot. Let's pull the follow through day system back in. I don't think we got a correction. I mean, we could have, but where am I? Hold on, I'm way off the marker here, bud. Yeah, it looks like we got one or two. So here's the follow through day system. Here's the 2019. Is that it? Yeah, here's the 2019 rally. So you have a follow through day here, and then we do get a correction here. Follow through day, correction, follow through day. But we didn't get the percentages we got here, so you can't expect that. All you can do is. So I would say don't focus on trying to hit a number, Aram. I think that's setting yourself up for failure. You want to give yourself some grace, and you want to see how you did. And like I said, just look at the numbers. Don't have a goal at all. The goal is to not have a goal. The goal is to let the market come to you, because if you have a goal and this market goes up 600%, right, you're probably going to be taking profits too early. But if you just focus on the process, you will get to a place where you are able to flow with the market more naturally, and you will do better. You will absolutely do better. Maybe in the next bull run, maybe you'll take profits at average of 20%, and then there'll be another one, and maybe you lose a little bit of money. But maybe when the big bull run comes, if you're honest with yourself and give yourself a break, you're able to give yourself some grace in the fact that you don't have this pressure to take profits at 50%. The other side of that is that maybe you don't get that 25% profitable run. Maybe it goes negative because you let all your stops get hit. So there's a balance, and it's a little bit of a catch-22, but you really should just be flowing with the market. You shouldn't be fighting the tide or fighting for 50% or anything like that. Just let it come to you. Focus on the practice. Focus on what the chart's telling you, and then just trade how it wants you to trade. And that's about it. So, but I think it's really good to do that post analysis and see what your numbers are, and just say, okay, well, my stops were too wide or my stops were too tight, and this is how I could, and then say, how could I have maximized it? And then while you're doing that exercise, focus on failures. Okay, how, by me trying to maximize profit, how would that fail me? How would it harm me doing what I'm thinking of doing? And maybe you can, and I've done that a lot. And what happens is you end up, it's definitely an extra layer of analysis, but what it allows you to do is get to an honest place where you're not, hyper focused on, making your whole trading model around one type of a rally. Okay. I don't know if I made any sense there, but let's go back to the 2-hour time frame here. Let's just say you notice that I'm just gonna make some stuff up here for the most part. Let's say you bought at the 21,944 and you're trying to figure out when to get out, right? You're like, and let's say you got out here. You're like, okay, well, I need to get out at a double top, and you get out at a double top. That's gonna work sometimes. It's not gonna work others. I don't have a good example. I'll try to think of one and circle back if it pops in my head. I see a bigger time frame is making me more comfortable. Then yeah, definitely stick to the bigger time frames. Yeah, go post analysis, see what time frames you were working on, because you should kind of remember that. You're like, oh, I'm making less trades on the 4 hour or the 8 hour. So you can use the 8 hour in the daily. Anyway, all right, let's keep it moving. But yeah, great time for post analysis. Great time for post analysis right now. 4-year cycle, like always, 90K top BTC 5X. Yeah, but that's in 2020. That's next year, right? A lot of people are saying next year. Yeah, 2024. So here's your 4th year, and then 2024 would be the next 4 years. Yeah, I mean, I'm not mad at it. See, here's the thing about for the 4-year cycle. Sank talking about the 4-year cycle. I believe it's straight due to the halvening. BTC. I can't type. So I think it's modeled to be about every 4 years, which is why you get the cycle. And it makes sense because you have to pay the miners, right? And this is a good graph. There we go. So, which is why the price runs up exponentially. But eventually it will do this. It will flatten out probably to a point of where the miners have to, excuse me, where the price will probably stabilize out. I don't know what level that is. I don't know. Maybe this is good. Maybe this is exactly what Bitcoin's price is going to do here. So supply and subsidy. This is going to. So here's 2024. Right here. Having early spring 2024. And we've actually talked about this quite at length. It's been a while though about Bitcoin probably won't go parabolic forever. It'll eventually become like a normal asset and kind of stagnate out as Bitcoin reaches these levels. And granted, this is decades and decades out. But if you look at this cycle, it is kind of inverse. The supply is almost like our price chart, right? And so we're here. There's still some good upside left, but eventually, in about 10 years, it'll probably be pretty darn stable at a price level because the miners don't need to be compensated as much. So I don't know if that means fees are going to go up on the network or how that's going to go up. But the compensation for the miners fundamentally is very likely why prices rise. And it's interesting that it actually works because there's no communication or anything. It just kind of happens. So, but I don't know why. It's a little bit quirky to me. But you can see, as you get less rewards, the reward has to double in price. And so but yeah, so this is an interesting graph. And I think everyone should understand this. Because early on, I mean, you need less rewards here. So everything was like, pennies and dollars. And then now we're moving into, we had thousands of dollars here. Now we're in thousands of dollars. And maybe we'll end up in hundreds of thousands of dollars or maybe even in the millions. But yeah, it's interesting. So I wish I had those numbers there. Was there something else here? Yeah, here we go. So these are the halvenings. So 2013... There you go, 2012, 2016, 2020, and then 2024. So it's about a year and a half out, but you're saying early spring 2024. So when we were, what's the date today? June. So there's a halvening. 365 days after the halvening. So we bottom out 365 days before the halvening. Maybe not fully bottom out, but so yeah, I guess we're getting to the part of 365 days before the halvening. And if you look at here, there's a lot of chop. This was our whole, one of our first normal bear markets right here in Bitcoin. This one wasn't quite a bear market. Neither was this one. But they weren't, it wasn't rip roaring and rallying. It's really good percentage here, obviously. But one thing to notice in regard to this previous chart is look at the percentages. 385, 142, and then 17. It's going down dramatically. 8,000%, 284. This one 559, so that kind of bucks that trend a little bit. But you can see that logarithmic growth curve that I used to have on here. I don't think I have anymore. But if you throw up that logarithmic growth curve over time, it does lead you to a point where, yeah, you definitely want to get in lower like this and wait for that thing to log up. So there's the actual, what someone at least calculated as the logarithmic growth curve. Unfortunately, we have already kind of broken it. Now, this is, I don't know exactly how this one works. Obviously, we're well underneath of it, so maybe we'll start hitting our head against the bottom of it. But you're saying 90K by whenever, so I'm here at 111, just randomly picking that, which actually is about early spring, is around 111,000. So yeah, maybe we'll bottom out at 90K. Last time around, we hit a big round number like 100 or 10,000. We ended up going to 17. So I don't know. Maybe we'll rally up on through to some of these middle ranges in the 170,000 area. Who knows? I mean, really, who knows? But this log growth curve held forever, and I don't know if anyone talks about this anymore because it's, if you were to go by this as your main signal, we're just done, and I don't believe that's the case. Also may get Fed losing control on rates, big global debt bond sell-off, then crash money to gold, BTC, etc. I don't know. I think that's a little bit, that's reaching. So I'm going to timestamp this segment. I don't know what to call it, but I definitely think it's reaching to anticipate, that's a lot to happen. You know what I mean? Like if I were to list a list of scenarios, that would be on there, but it wouldn't be towards the top. So, global calamity is kind of what 50 Satoshi's been talking about now for a long time. And granted, he got his bear market, so kudos to him. But he was also I don't know when he started talking about it, but it was probably like much lower. So I don't know. He got his sell off. But to try to go into and understand and hypothesize something like that and then position yourself for it. See, that's the other thing. It's one thing to hypothesize about these events. It's another thing to position yourself for it, right? Because that's the end. At the end of the day, we're all here to position ourselves for a potential future. Because that's what we're doing. We're here to make money. We're here to position and buy things and sell things at an appropriate time frame. So yeah, I mean, and to your point here about your macro situation, inflation, war, money creation never ending. Yeah, the human cycle, there's no end in sight for the human cycle of inflation, war, money creation, hyperinflation, and then society death. I get it. I understand it. The question is it gonna happen now? I mean, I remember back in the day before we had $1 trillion in debt, and it was a huge deal when we got to $1 trillion. Now we're at like 37 and no one bats an eye. Maybe it'll stop at 100 trillion. Maybe it'll stop at a quadrillion. Who the hell knows? But as long as the U.S. is the world's power, if you look at some of the Ray Dalio stuff, and he actually catalogs what you're talking about. Macro situations, inflation, war, money creation. That's what he does. And he runs the world's biggest hedge fund, and he's a history buff when it comes to monetary policy and how it affects the real world. And, he thinks a war with China and the U.S. is likely inevitable with China winning. And the question is, when does that happen? Is it 10 years, 20 years? And then again, how do you position yourself? If you were to know this information prior to World War II, you'd be like, oh, I'm just going to move to the U.S. And then you would be in the U.S. and you would benefit from being in the U.S. and that would be your trade, in my opinion. I guess you could have just bought dollars too and just lived in the U.K. or lived in Poland or wherever you're from. But, well, actually, let's just say the U.K. because at the time the U.K. was the world's dominant superpower and the world's reserve currency. But after World War II, it was the U.S. dollar. And so you want to be in the U.S. or denominating in the U.S. dollar to have the edge over the rest of the world. So how do you do that now? Do you want to move to China? I don't know who wants to move to China. I mean, living under a communist regime doesn't really sound like I would do very well there. Do I hold Chinese dollars? Well, maybe, because I mean, it's hard to trust the Chinese government. So how do you position yourself? That's the key. Is it Bitcoin? I mean, is Bitcoin the end? Is it going to rally? Or if the US dollar system fails, and if you look at the predominant currency of Bitcoin is in dollars, I mean, do you get hyperinflation in Bitcoin? And I guess, isn't China going to start doing Bitcoin trading? And I think China's going to allow Bitcoin trading. I think I heard, I don't know if it's real or not, but I heard something like that. Could have been something that was false. X advisor calls. Hong Kong shows desire to be crypto hub with new regulations. So yeah, I mean, maybe crypto could be that intermediary between the two currencies, Anti-inflation trade. Yeah, maybe. I mean, maybe. Here's the funny thing, and a little bit serendipitous maybe. Maybe Bitcoin's here for a reason. I mean, it's not necessarily maybe, kind of is a spiritual thing, but I mean, maybe Bitcoin came along when it did because it could, but maybe Bitcoin came along to kind of help us deal with whatever is going to happen in the future. I don't know. I don't know. It's just, maybe it's here for a reason when it's here. It kind of popped up, with 2008, we got a lot of money printing in 08, now 2020, a ton even more money printing with more on the table, and our leaders don't seem to care about that. Maybe it's here for a reason, Maybe we need more allocation of our percentage of our assets into Bitcoin. I don't know. People think it's volatile and stuff, but I mean, buying recently low prices like this seems to be pretty good bet longer term. Bitcoin's down 66%. It doesn't tend to go much more down, 85. And I mean, so I get your point. And I accept your point. The question is timing and positioning. That's the question. What's the timing? What's the positioning? If you've got $1 million in a Roth IRA, what do you do? Do you just, do you put it all into BTC? I don't know. That's a tough one. I know I don't want to put it into gold. I mean, I guess gold could do something, but kind of has the world's largest cup and handle on it right now. Maybe it's gonna shoot up. Who knows? Maybe it'll shoot up with BTC. It's hard to say exactly, but yeah, it's still holding up. I think if you were to plot the SPX against it, you'd be a little bit feeling worse for wear. Indices. So, yeah, I guess I got to eat a little bit of crow here. It kind of is performing a little better than the S&P 500 from 2005, at least from 2005. 2009, S&P's greatly outperformed gold. So I guess it just depends. Where you want to measure it from. If you go all time, maybe gold versus Dow Jones. So that goes to 1978. So the Dow Jones, or S&P, I guess, has greatly outperformed the Dow Jones by aggregate bond index 116 too. So, anywho, all right, let's get back to it. Yeah, it's a good topic of conversation. I mean, that's one of the reasons we're involved in Bitcoin, right? Is, I mean, all the above. It's a good asset. It's a new asset. It'll be here for a long time. It's valuable. It increases in value over time. It's a good trading vehicle. It's liquid. You know what I mean? All those good things. I think all things are, true for BTC like that. All right, let's move on to Atom. Still moving down the top 20. Wherever Atom is. There we go. All right, so let's get off the weekly chart. I think it's hurt my eyeballs doing that. All right, so more chop, bear flag down here for Atom. Daily time frame, not doing too much, just chopping around. But it looks like we're in a minor downtrend. Will it get more exacerbated to the downside? I think that's the question. If it takes out this 1269 level, there's a good possibility that it has another leg down. But the legs down haven't been that great. I think there's other better trades out there. All right, next up is Chainlink. And this has been very choppy. It was trying to get out of the middle of its range, but obviously it's not doing that. It's just a lot more chop. And then Litecoin also right now with some chop as well has been unable to get going, although still holding higher and getting, I guess, a little bit of support. We'll see if it's going to hold the lows of this consolidation, which are about the 88.25. I do have a Litecoin BTC later, which has bounced back nicely after looking like it was trying to fall apart. All right, so let's wrap up the top 20 BTC. Well, we moved into a bear market, or a correction, excuse me. I don't want to say bear market again with using proper terms. Moved into a correction again, and I think we're just going to chop around here. I don't know if we're going to fall apart completely. Always is a possibility, but the buyers have basically stepped aside, let the sellers taken over, and it's hard to make bullish trades in that environment. There's not too much bearish going on right now either. It just seems like it's an environment to wait and see what happens. Last time we were kind of in that environment, we talked about popping up, and we did end up popping up above our 21,944 alert. In a few days, if we see something similar, I'll probably add another alert along these lows, along the same premise, and we'll see if we get another rally after that. On 2 hours Litecoin chart, there's big volume. All right, let's go back to that Litecoin chart. Yeah, there's a nice little hammer candle there at the lows. That's not too bad. So when you get these hammer candles at lows like this, you can use that as an entry signal. I actually did that on Bitcoin during. I'll show you what I did. It was a small signal, but it was a really actually did a really good job on it. I didn't tell you guys about it, but. Because I did it. I forget when I did it. It was after the show, and I mean, it wasn't really worth going over. But I'll go over now. If you're talking about like, big volume candles, this is, I think it was even like 5-minute chart. I was just sitting in front of my computer one day, and just kind of noticed what was going on, and there was a big volume spike right here. This hammer candle. It just happened to be the low, right there. Big volume at the low. I took an entry in the close. And held that for a while. I forget exactly when I exited, but I held for a good amount of time. I got most of the run up. It wasn't a huge position size, though, because I knew I wasn't going to be very active. And I think I ended up selling over here somewhere. After we kind of topped out a little bit, I just kind of finally bowed out. But you can use those hammer candles. Good volume on that candle specifically, like that Litecoin one, pretty good volume. You can try to take that tight stop loss. Single hammer candles like this in the right context can be very, very powerful. So obviously I wish I went heavier, but it is what it is. But yeah, I mean, look at that. If you're looking at this, which I was in the moment, I'm like, oh shoot, that volume looks really good. We undercut this, we're rallying back. It's a perfect undercut and rally, and ended up working out. You're in already? Okay. Yeah, there you go. So you have the stop loss, right? So if you got in, now this particular 5-minute, this particular 5-minute doesn't really have a hammer candle on it. But what you can do is just make sure you have a good stop loss and you're not over trading. You kind of just have to let it go and be, at least in my opinion, I don't know of another way to do it other than just let it go. Otherwise, you can just get chopped around. We've seen lots of charts where lows get cut down multiple times, and I don't want to be chopped up 5 and 6 times because a 2% stop loss turns into like a 15% fiasco, and you don't want that. Yeah, you don't want that, Aram. You want to let it, because if you're getting stopped out, then your read is wrong. That's it. It's pretty straightforward. So like on this 2-hour chart, we talked about using higher time frames, and there's another thing at play here too, Aram. Litecoin is not leading the way. I know you like Litecoin, and I agree it's a good thing. But what happens is if the market doesn't agree with us, then we're still wrong. And it is a good asset, and it's going to be a good asset. But if it's chopping your account, so just add up all your stop losses and see what percentage of loss you would have had just as a single trade. And if it's too big, you just have to let it go. You just have to let it go until you find a better signal. You can't take every single signal. All right, USD pairs. First one up is REP, and it's the only one up. So this is still in a cup and handle. Didn't react too much to some of the recent selling pressure. While it did move down a little bit, it bounced back up pretty nicely. And so I still have the 1076 as an active alert level. Buying pressure needs to step in for this to work. And obviously we're in an environment where we just moved into a correction. So I'm not, I probably won't be trading it. I got a busy day anyways. So I know I won't be trading it. But if you're going to be around, it's something you can keep a look at. Litecoin may die in death mining spiral. I'm not familiar with that. Is there something going on with Litecoin fundamentally like that could be holding it down? I don't know. I'll dig into your other comment here in a little bit. Let me get through the BTC pairs. So that's the wrong list. The first one up is CFX, which we've been following pretty closely here on the show for a while. So great move up at the 0676, kept moving up, but we are failing our current setup. We've been moving our alert lower. 3164 is current levels. We did undercut, volume accelerated, but not too bad. So we're going to give this guy a chance and wait and see what it does. Maybe sometime this week, if not next week, we'll have a better read on this as it's still consolidating. But CFX gone, but not dead, I don't think. Next one up is FIS. I don't think we've ever talked about this one. One of these I had to add to the whole list. I think it was this one. This has a cup and handle on it as well. 3264 is the alert level here. We'll see if that gets going. It's a pretty random coin. It's in a decent uptrend. It's just a possibility, again, if you're active and you're looking for something to trade. And next up is Litecoin. So Litecoin we had talked about a couple days ago underneath the trend and bounced back really nice. I didn't highlight it since then. We talked about it probably on this day on Tuesday underneath the trend line, but it bounced back pretty nicely. We didn't have a tremendous amount of selling pressure. The VA tool was elevated, but not too bad. And we're trying to come back. So this pattern has since kind of saved itself a little bit. If you just like Litecoin, you just want to trade Litecoin versus Bitcoin, I guess you could try to. It's probably a little bit too elevated to buy. And your stop's at about 6%. Just depends if you want to risk it or not. But I thought it was interesting that it came back, and I figure I should point it out. Harmony. All right, Harmony, we talked about the other day, maybe making kind of a lower risk trade, and it risked us. So stopped you out if you did it. I don't know anybody that did, but right now we're on. It is a bull flag of ROM. Yeah, remember we talked about that a week or two ago. So I don't know if you risk it down here on this trend line. This is a low Satoshi token. It's under 100 sats, now officially under 100 sats at 95 sats. So the way you handle low Satoshi token is if you like it and if you want it, you don't have to like it. You don't have to want it. You buy as low as is feasible with a really tight stop loss because these are large percentages as you start dipping lower. But do you dare buy it right there? I don't know. But I'm just pointing it out because it's not dead yet, even though it doesn't look good at all. All right, next up is YFI. And YFI. Let me get down. There we go. So this is interesting. I don't have a new alert on this one, but this one popped up. I think it's going to be good consolidation. Volume is getting to normal, which I think is, I do like these setups where the volume gets to normal pretty quick, but the sellers did step in. Buyers still had the edge. And if we're going to chop around a bit, ideally, this will do something. This will form a formation of some kind. Really good volume on the way up. And I don't just want to throw it away. I just want to highlight it. What up, Loopy? Bitcoin prediction this cycle is between 0 and 500,000. I think you're wrong, Loopy. I think you're wrong. No matter what it is. Isn't that how life works sometimes? No matter what it is, it just seems like you're wrong. I had a day, actually it was yesterday, that I thought, oh, I had a really bad 2 weeks at my work where just shit wasn't going my way. And I thought I was going to have another day like that yesterday, but luckily the universe just teased it for me, I guess, to make me realize that I was being lucky. Anyway, I'm tired today. What are we doing here? I already forgot what we're doing. So I'm done with the top. I'm done with my coins. Done with everything. Let's take a look at stocks. I know we were going to go into KNC up and down. I think I saw that. There's a lot of up and down coins that I pass. KNC. Yeah, it's just we have a 39.75. I don't even like that. I mean, we chopped above it here, chopped above it here, came back, big spike on volume, not what you want to see, you know what I mean? Some of these alerts, after they get triggered, they're just, and this one comes off of the lows, and we talked about this, I think, with Matic, when it came off of its lows, all the way from its lows up to its top trend line and stalled out. Really hard to manage that trade effectively. We're going to look at a little bit. I think it's Sanks thing. Yeah, all prices are now dependent on U.S. bonds. All right, Sancta saying all prices now are depend on U.S. bonds, the 10-year. If rates go up more, stonks and cryptos will tank. Fed needs to buy it up to save the U.S. from crash. Yeah, if they do raise the rates more, yeah, definitely. Because if the Fed gets more aggressive, then yes, they will. Maybe we'll end up doing the whole 1970s thing again. And the thing about the 1970s, and one of the funny things is that, like the Dow chopped. I think the S&P chopped and the Dow kind of rose up a little bit, or vice versa. So here's 16 years of basic chop, 66 into 82. This is okay. It's the Dow Jones. So the S&P. This may be the S&P. What is this? I don't know what that is, but so look at the Dow Jones. I'm gonna go back and look at the other one. So yeah, the 1970s log scale. Take log scale off. Yeah, see, one of these looks like it didn't chop. I always forget which one. I wonder if they give us the ability to look at the S&P. 29 bear market. There you go. Dow Jones versus Nasdaq 771. That's funny. S&P 90-year chart. Here we go. Yeah, so here's some of that chop. Some of these charts are weird. I don't know. But, we haven't really seen a major choppily market in a long time. The last time we did was from 2000 up until 2015. We could be in the middle of another, or I guess the start of another one of those, potentially. So that's always something to keep in mind. So there's the 70s and 80s. Chopped around there. Here's the 2000s. I mean, we've already come down substantial amounts. And yeah, we could chop and go sideways and never clear highs. I think I talked recently about the stock market goes up. It'd be really weird if we went into new highs. All right, let's do general stocks now. Yeah, maybe we'll go back and look at the some 10-year bonds and stuff. Stonks. So Nasdaq had a bad day Friday. And we'll just get rid of everything. Bad day on Friday. You got the 50 coming up to the 200-day moving average. Doesn't look like it's going to attempt to cross it. And it's not looking super hot. You know, whether it's the next high or the next leg down beneath this kind of support level, it's possible. You know, we don't have a lot of good macro on the horizon. Not a lot of. It's not even that it needs good macro; it just needs normalcy. I'm not even sure we have normalcy on the horizon. Ericsson just announced some layoffs, so maybe things are just exacerbating themselves a little bit more. Sankt was talking about the wars and stuff. I mean, all that stuff's still going on. A lot of uncertainty right now. We just need to nuke the Kremlin with just a little nuke, just a tiny nuke. Okay, just a tiny one. S&P did the bull cross, but didn't help it that much. We didn't quite get above this spike. We were looking for that. Russell 2000 had a good run, but we kind of already erased that. The transportation index was holding up high. Now we've pulled back with a lower high. And we've really been, if you look at this, here's 2018. We did rally above it during 2021, but not too far. So the transportation index may actually kind of, show a little bit of this weird choppiness that it feels like we've been in. And these transportation, and I've never charted one of these. I don't know. Let's give up that wick. Oh, we gotta give it the wick. RSI is in an okay spot. So it looks like we hold the 50-day. We kind of ride the 50-day for the most part. We come to the 200-day, cross it, hit the trend line, cross it, hit the trend line. At least going back to 1974. That's with log on, mind you. It'd be a completely different trend line with log off. So not dying yet, at least on that one. What are you talking about? Oh, these upper trend lines on the indexes here. Yeah, definitely testing them. So this could be a nice test. Do we have it on the NASDAQ? Yeah, NASDAQ, we're still above it. These upper trend lines. We're still above them. So technically and we see this on crypto often. We see this on 2-hour charts. I mean, we haven't been in major bullish environments for a while. So we haven't seen them as much. But hold on. But we can chop above these. I don't know if this is going to do that, but the indexes don't work how stocks and cryptos work. They just they're their own thing. They're their own entities, so you kind of have to treat them a little bit differently. But ideally, chopping above a trend like this would be okay. Let's get into some individual names. Apple with a lower high, definitive lower high here. It is a good swing high, which is a nice reference point for us. Still the 50 below the 200-day on Apple, which is interesting. Actually, very interesting. When was the last time we lived below here? This is the last time we lived below the 200-day. Kind of had an interim high here. Okay, so we popped above the 200 a couple of times there. Where this one we kind of held down. Yeah, it's that 2015, 2016 market. This wasn't as actually, yeah, it's weird that got above and this did not. But once we crossed the trends here, once we crossed the 200-day, it was just gone and didn't come back until recently. So definitely chopping around there. Microsoft, let's see what its averages are doing. So another definitive lower high. A lot of chop down here, although this looks like a bad sell-off, but look at the volume. Really not a lot of participation on this sell-off. Could be a retest of the 50-day. So this is looking a little bit better. Apple also with some lower volume. Look how underneath average volume we are. So that's not too bad. Tesla's holding really nice and tight. I'm pretty darn impressed by what Tesla's doing. I still think chop is on the table. But the inability of this thing to drop is really amazing. Volume aggregation tool loves this chart. Absolutely loves it. You can see the super high volume right there. If we zoom out, we're pretty low volume up here as we kind of failed to go higher. It looks a little bit like Bitcoin. your low volume as you go higher here. You're just not able to put together those rallies, and then it just kind of falters on you. But at the low here, we do get that high volume, and then now we're rallying through. So we're diminishing volume this week like the rest of those stocks. So we're probably done with the major portion of the rally, but we should find some stability. Probably around the 50-day, maybe we'll test this gap around earnings. That's probably going to be some kind of a magnet target. And the fact that, once again, we do have a lower high here, could lead to, more consolidation. So great rally, not bad. We'll see if it has some steam to continue, though. I was hoping for good stuff on Friday, and the market didn't give it. I mean, Tesla was okay, but the market didn't give us anything good on Friday. Amazon testing that 200-day and just overtly failing. Very high volume too. That was earnings and just gapped right back down. Once again, Amazon under brand new management, and that can be concerning because it's not Jeff Bezos calling the shots. It's these other people. So again, could be concerning. Could be one of the reasons why Amazon isn't holding up like some of these other big tech names, is maybe a little bit of confidence has been removed from the name due to that fact. And it's not a new thing. I mean, Bezos stepped down a while ago. Give NPR my click. When's the date? Yeah, he's not really going anywhere. Yeah, but still, he doesn't have the title. Where is it? I don't know. Maybe stepped down. I think he gave like a year's notice or something like that. So probably last year he stepped down. Anyway, I don't know. So anyway, he's no longer CEO any longer. Some I don't know. I have Square on here, but I do. ExxonMobil, gold, drop it down a little bit here. Silver, ooh, that's a bad day for silver. Buddy, Backblaze, AMD not holding high in its flag, kind of rolling over, looking a little bit more like this than it is, like one of these over here. So we'll probably, again, more chop. I mean, I don't think AMD's going anywhere long term. It's got a big growth cycle ahead of it. NVIDIA had a monster day on Thursday. It's like a 14% gap due to earnings, holding some stability there. And this trend line doing, I guess, so good so far. We'll see if we get to measured move on this inverted head and shoulders, but just a monster day. NVIDIA owns the artificial intelligence market, owns it. Dollar index, coming up. We haven't looked at this in probably a week or two. We were in a bull flag here, so we did slowly start to move up. And looks like we'll go up and probably test the 109, maybe the 113. We shall see. Nice little pullback there, though. So that doesn't bode well for the stock market. It's probably another reason why the market is failing. More flights to safety. So this is a flight to safety play when the dollars rise like this and the markets fall. Probably money rotation into safer asset classes. Just the dollar itself moving into cash. Euro down. Great British Pound down a little bit further. Cup and handle never coming to fruition. So that's about it, guys. Yeah, nothing great, unfortunately. We are in a point of consolidation. Let's wrap it up. So wrapping up the day today, we're moved into a correction with BTC. The stock markets had a bad day on Friday. The dollar moved up on Friday. Definitely defensive things are taking place. So if you still have positions in the market, make sure you know where your exit point is, and you can take appropriate action. We'll still look for bottoming action, if and when it pops up, and we'll definitely, we do the show every day. We'll look for opportunities, and that's about that in reality. So again, if you've got positions, know where you're exiting. take profits. This is a great time to do post analysis. We were talking with this about a ROM or with a ROM earlier. You know, we had a nice rally here. We just moved into a correction. So technically this stage of the rally is over. We could do another one if we fail to drop. We could have another rally ensue, but you know, do some post analysis on this rally. How did you do? What was your maximum potential gain on all of your trades? And then average that out. What was your total realized gain on all of those trades, and average that out? And how can you, you know, you're never going to get that top number, but how can you do better? Do you sell earlier? Do you hold longer? Did you not, you know, did you sell too early and have to hold longer? Did you have hard stops? Did you not have hard stops? All those things come into play. So the next time when we get a follow through day, or even prior to that, we get some buy signals, what do you do? All right, everyone, have a great day. Appreciate you being here. This is a public show, so if you want to join the Power Hour, you can go to real-crypto.com and click on services, and you can join the Power Hour in there. And we do a newsletter every day and a video analysis of the newsletter, and then we do the Saturday shows as well, like the one we just did. So have a great day, guys. Have a good weekend. Stay safe out there. I'll see you next time.